Hello and welcome to watching this video. I'm Sam Lindsay, founder of My Mortgage Angel, and today I'm joined with the fabulous Naomi Haynes from Naomi Haynes Financial Planning. Naomi, we met at a networking event probably about a year ago now, and I think it was really evident from the day that we met that we really had a lot of synergies and we saw things quite similarly, even dressed quite similarly. So and we had this idea that we needed to share with the world that it is never too early to start thinking about your future, and what does that look like in terms of mortgages and pensions and planning. So I've done a lot of rambling there. Naomi, please introduce yourself to the world.
That was a great introduction, Sam. Thank you so much. So, I'm Naomi Haynes. I'm passionate about empowering people along their financial journeys. I provide down to earth, easy to understand financial advice to help get people's money working for them, working harder for them in a clear, understandable way. I think that's it. And I think we can just get cracking. What do you think, Sam?
So, Naomi, I'm going to interrogate you first. I'm going to ask you some questions so you can share your knowledge, and then you can ask me some questions, and hopefully, we should answer a lot of people's questions out there. People they don't even know what the questions are because sometimes you don't know what you don't
Yes.
know, do you? So, okay, so hard hitting to start with. What is a pension and is it scary, Naomi?
Okay, so great question, Sam. Um, I refer to pensions as the P word because so many people do find them really, really scary. And they worry about them. They think they're complicated. They are complicated, but they shouldn't be. And I think a really easy way to describe a pension, it's just an investment for your future. And in fact, a pension is very similar to most other types of investments, but all the pension part is are some advantages that are put around it. Think of like a present that you put gift wrap around it. Pension is the gift wrap around it that just adds some advantages to it. And let me just go through what those advantages are. So you've got this investment, very similar to lots of other investments, but let's talk about this pension gift wrapper that I mentioned. That gift wrapper allows you to put money into your pension and you receive tax relief on that. So when we all have money in our bank accounts, we have probably paid tax on it. We've worked really hard for it. We've probably paid tax on it. And so what the government's saying is saying, look, if you put that money back into a pension, you don't need to have paid tax on it. So they give us tax relief. So if you're putting into a personal pension, if you put £100 into a personal pension, the government will automatically think, right, you've already paid basic rate tax on that. So we're going to add some money onto it. So £100 goes in, it magically becomes £125. If you're a higher rate taxpayer or anything else, you can just go through your self-assessment tax return. But simply put, money goes into a pension, there's tax relief on it. If it goes straight from your salary, from your earnings, from your payslip, there's just no tax. It just goes straight through. It's beautiful. What's inside a pension grows without any taxes on it as well. So it grows in a really it grows without any kind of friction to reduce that growth. And then I like this about pension. You're not allowed to access it until you're older. This is really important. A pension is there for your future. And as scary as it is, or as young as some people think they are, but actually it's really important to not be able to access it until you are looking at winding down work. And then there are some tax advantages when you take money out as well. So a pension is just a really good way of saving for your future. It's also worth bearing in mind that a pension, as it is just an investment, there's something called compounding. And think of that like a snowball that rolls down a hill. And obviously, the bigger the snowball is, the more snow it can collect on the way down. So whilst it may grow slowly at the start, as it starts getting bigger, it really starts bringing on more and more snow. And that's how compounding works. Your returns make returns, which make returns, which make returns. And then suddenly really powerful as they go. I don't think they should be scary. I know that finance in general can really appear scary. I do call it the P word, so I'm not mentioning pension, but hopefully that gives people a little bit of an insight into them.
I think that's really clear. You're such a natural at explaining things.
Thank you so
I
much,
think
Sam.
you really put me at ease and make me comfortable, and you make me feel like no question is ever too silly, which is, I think, where we both come from. Probably
Always.
should say for our compliance friends that we're recording this on the 18th of July 2025. Um, but yes, I'm going to ask you the next question. So, when should we start a pension? You say it's never too early, but I'm guessing that there is a minimum age, Naomi?
Did you know? It's a great question. You can start a pension from the day you're born. And
Well,
actually,
you
my
can't.
children, well, you can't,
You're a
yeah, you
baby.
can, yeah. Well, you could be a very clever baby, but yes, you can have a pension started for you. If you're under 18, yes, your parent will be your, or a guardian will be able to do that for you. All three of my children have pensions of their own and have had pensions for quite a while, and I think it's a really nice way, in particular maybe for family to gift, depending on situations. Now, but let's talk realistically, because not everyone's going to be in a situation to start a pension from the moment they've just had a baby, and you've got to look after yourself first. So I would say the best time to start a pension is as soon as you're earning money, or as soon as you've got some excess savings that you can start. Everyone's situation is going to be different. So it's going to really depend on yourself and your own finances. But the way I look at it is that we all have different buckets that we want to invest in. Some of those buckets are for now. We have to invest in ourselves, a quality and standard of living for now, but we always need to think about the future. That future could be a year away, a few years away, but you also mustn't forget your kind of your future, because there is going to be a point in your life when you are not going to work. And you're therefore not going to be able to earn. So I would really always say it really is never too early. You don't need a lot of money. And in fact, the earlier you start, the smaller amount of money that you need. Having said that, for anybody watching, it's also never too late. So don't panic if you're not really young and you're thinking, right, well, this is it. It's too late for me. I'm not going to bother on this. So so that's where I would say on that.
Thank you. And sorry, I think I had another internet blip there. So I've changed locations for the eagle-eyed of you. But moving on to the last question, Naomi, that I have for you. So I hear a lot of people say, I maybe don't need a pension because I get auto-enrollment from work. How does that all work with your planning?
Okay, now the first thing to remember is that not everyone will be auto-enrolled. There are self-employed people. There are those that don't qualify for auto-enrollment. So that's the first thing. So we need to be thinking about investing for our future throughout our working lives, throughout our lives, and even if we're not working and taking a break. So even if you are auto-enrolled, what if you take a break? I mean, women and carers is a really good example of that. And the gender pension gap exists because not everybody is auto-enrolled. A few things to think about throughout our lives. We'll have numerous types of jobs, so multiple pensions, and everyone is different. I've mentioned this before, but everyone is different. For some people, their auto-enrolled pension may absolutely be just spot on for them, but for a lot of people it just won't be enough. I mean, for someone like, for people like you and me, Sam, throughout our working lives, there wasn't always auto enrollment. So, you know, but let's say for all young people where auto enrollment exists, even if you qualify for it for your entire career, there is a large possibility it's just not going to be enough. It's not going to be right for you. So it's always worth just assessing what you want your future to look like. Is it going to work? Sometimes pensions can look like a large number, but actually it may not get you very far. It also depends on whether you qualify for a full state pension, which is really important, just to keep tracking and making sure that even with work gaps or without any gaps or with self-employment or any changes in employment and earnings history, that you will still qualify for a full state pension, and that your future provision, whether that's in an auto-enroll pension, a personal pension, or through any other means, is going to be suitable for you because you're unique. I think that's the best way to look at it. So thank you, Sam, for those questions.
It's almost like they were pre-prepared, Naomi.
Goodness me, you
It's
can
like
read my
we're
mind.
planners by nature, aren't we? So
We are.
there's no way we
That's
were just going
lovely.
to wing this today, was there?
No, not at all. But Sam, I don't like. I want to put the microphone over to you. I want to find out more about what you do, which I think is wonderful and different to so many mortgage advisors that I've seen elsewhere as well. So I'd love to know, when it comes to mortgage, look, where do I start? There's so many people out there that want to get on the property ladder, are on the property ladder, but when it comes to their mortgage and their situation, tell me, Sam, where do I start?
Okay, so we are My Mortgage Angel and we offer friendly mortgage advice. I don't think mortgages are taught to the level they should be in schools. And most of my conversations with clients start with, I don't know the first thing about mortgages, and that's completely fine. I've studied towards them, I understand them, I do them all day, every day. I absolutely love them. I've been really interested in them for a very long time since I got my first one. There's no question that's too silly. A mortgage, in essence, is a very, very big loan to buy a property. It's secured against the property. You make monthly payments towards that, and it allows most people to buy a home at whatever stage in their life they're ready. I'm working with lots of maybe 18, 19-year-olds who are ready, who've been planning early and they're ready to buy their property now. Equally, I'm seeing a lot of first-time buyers later in life, maybe 50s, maybe 60s, where buying a property wasn't an option in their earlier days. They weren't ready, they hadn't thought about it. So whenever the time is right for you, but go back to our earlier theme of it's never too early. Actually, the moment you're thinking about, I would like to buy a property, maybe you're a teenager, maybe you're just starting your first job, maybe you're thinking about, my son's looking at what careers he might be wanting to do so he can choose his options at school. So we're thinking about what jobs might you want to do and what do you want to achieve in that stage of your life. Where do you want to live? What kind of environment do you want around you? So we're already starting to build a bit of a plan towards the deposit that he might need for his property and how much he might need to earn in the future to support the mortgage, so that you don't have to buy the house out for cash or the flat. You can take a mortgage. So really, it's let's have that plan. Let's have that conversation. I can kind of forecast for you, how much do you need to earn, what do your debts need to look like, what does your credit score need to look like, what does your deposit need to be, because trying to save a deposit over 20 years is going to be a lot easier than trying to save a deposit over 2 years. So if maybe when you get money, do you allocate, okay, some of it's for pensions, some of it's for my house, some of it's maybe for my car in the future, some of it might be for university, and some of it's for now. It's just a slightly different way of thinking about it. It's longer term.
That's great. Oh, Sam, I do love how you we're so aligned, but how you bring that down to earth. And I agree with you. Financial education in all forms, uh, isn't always there in the way that that we want it to be when we're at school, and we just don't learn about these things. So thanks for explaining that. So you kind of really helpfully explain where do I start. Really wanted to chat about when and when the time is right. You obviously, unlike a pension, you can't get a mortgage from birth, but how can someone start planning earlier? You talked about when they're ready, but how could someone be thinking, actually, maybe I should be? What should they be doing? Thanks.
Okay. So I will talk to anybody who's 18 or over, but equally, I'm happy to talk to parents so that they can maybe share information with their children if they are so inclined. But I think from a parental point of view, I am also thinking, okay, I would like to contribute towards the deposit for my children. So I'm thinking about putting my own savings in place to help them. But from their point of view, I will definitely be talking to them myself or encouraging them to speak to an independent mortgage advisor. Maybe they don't want to listen to their mum as their mortgage advisor. But the way we work with people is we have a chat. We find out what situation they're in, whether they're looking. Are you looking to buy now? Are you looking to buy in the future? And then that just kind of gauges our timescale. And we look at your documents, we look at your situation or the forecast for the situation, and we make a plan for you. So, like I touched on earlier, a mortgage is based on how much you earn less your fixed outgoing. So, we are looking quite a lot of detail around your situation, because then we can see how much you might be able to borrow. And if that's not enough on the job that you've got your heart, I definitely want to do this, but this is the income that I'm going to have. If that's not enough to get you the dream home, then the way to bridge that gap is going to be with your deposit. Can your parents help you? Have you got inheritance potentially? Or is it just going to be down to you and doing your savings? And then I think it's easier to save for something because you know what the rules are. I do a lot of events. I go to wedding shows and schools, and I try to pop up where people don't expect me, because then I can maybe just have a chat with them. But obviously, people do approach me because they are interested about mortgages as well, and it's just about that joined up thinking of I know this is how much I need to save. So therefore, if I break it down into, okay, I want to do it over 5 years. So you've got a monthly target of how much you want to save. It's not a need, it's a want. It's easier to make that come true, because the saying is, a dream is just a dream until you turn it into a plan, and you can make it achievable by breaking it down into small steps along the way. If you don't know where you're trying to get to, it can feel overwhelming and daunting. And then a lot of people give up. And there's a lot of stuff in the press and the general information out there. It's impossible for people to get on the housing market. It's not impossible, but the earlier you plan that, the more likely you are to make your dream come true.
Absolutely. Oh my goodness, that's fantastic and really helpful. And I think it is so important to be thinking about the future. Shouldn't really be coming to get a mortgage when you've already found that home. You need to be planning. So I think we're both aligned on that. Planning is key. So, but tell me what's next for people. They've come to you, or you know, they've got their first mortgage, mum and dad have helped or whatever. What's next for them?
So, whilst we do work with lots of first-time buyers, we also work with people going through divorce or separation. I will always say, you know me from networking, Naomi. There are hundreds of mortgage advisors out there, and everybody, you need to find the mortgage advisor that's right for you, somebody that you trust, somebody that you resonate with, that can help you through your situation. Working in that divorce space, I feel that we can build that real trust with clients, and they can, because we've done it so many times before. Once you take the emotion out of it, from a financial point of view, okay, there are some very clearly defined steps that you can take to put yourself in the strongest possible position. But maybe you are happily married, or just moving on from your first home. Maybe you're upsizing, maybe your family's growing, or maybe you're just trying to relocate because your work you don't maybe necessarily need to be in that location. I think obviously since the pandemic, lots of things have changed. The world has changed. and it is changing where people want to live, what they're looking for in a property. So we can help with that plan of, okay, can I move? How much can I afford? Let's think about the fees that are included with moving, or actually, is it better to stay and improve the property I've got? There's lots of options to think through. And again, when you've got more time on your hands, you don't have to make a quick decision, because I find that puts people under stress. When you're coming to the end of your mortgage rate, we would like to talk to you 6 months before your rate ends to talk about your options, to give you an idea of what your mortgage payments might be moving to. They might be moving up, they might be moving down, to give you that plan, rather than, okay, your mortgage payment is changing in 4 weeks' time. This is what it is. It's too much of a shock, in my opinion. So it's just that longer planning. Or maybe you're thinking about investing in an investment property. If you've got a deposit in that space, or even if you don't have a deposit in that space, just to understand what the options are and how it works. They're the conversations I love. I think that's the best part of my job, is someone comes to me and says, right, this is my idea. Whatever this idea is, talk to me, and we'll talk to a professional, talk to somebody, and get a plan in place and find out how you can make that happen for you.
That's absolutely amazing. Well, thank you so much, Sam. I wish that we could go on chatting forever, and maybe when we stop record, we probably will do, knowing us. But listen, thanks so much, Sam, for giving us this great insight and making mortgages less scary and much more accessible for everybody. Thanks everyone for listening. It's great that you've come in to learn more about these topics. Remember, Sam and I, we're here to support your journey, to support you, but everyone is different. So what works for one person may not work for another. So please don't take anything as what we've said as advice. I recommend that you speak to a professional. That could be someone like us, but whoever it is, make sure it's an advisor that you trust and that you're happy to work with along your journey. And all that's left for me to say is take care, and thank you, and goodbye.
Thank you, Naomi.
Thanks, Sam.